Hey, welcome everybody. It's good to have you joining us this month. We are looking forward to taking a few moments and just sharing our thoughts here in October of what's going on in the market. But first and foremost, wow, October. We're 3 quarters of the way through the year. We're moving into fall. I'm going to be honest, we're moving into my favorite season of the year. I love this time of year for a number of reasons. How about apple cider? Anybody, right? Apple pies, apple everything, especially in South Central PA where we are. Apples are very popular around here. But also the pumpkins and pumpkin pie and pumpkin bread and pumpkin spice. Come on, be honest. Have you had your pumpkin latte yet? From somewhere. I know it's fun time of year for everyone. Throw in some campfires and s'mores outside in the cool evenings and football. This is my favorite time of year. Chuck, thanks for joining us. It's good to have you on board.
My
Are you ready
pleasure,
for
Michael, as
fall?
always. Absolutely. You got it. Love this time
Awesome.
of the year.
Yeah. So I also love this time of year for what the market has in store. And so we're going to take a few minutes today. We are entering fourth quarter. And historically, fourth quarter tends to do very well in the market. It doesn't mean it's always good, but on an average, it's one of the better quarters out of the year. And so October being the scary month, it's not just Halloween for trick or treating kids, is sometimes it's Halloween for the markets. It really loves it or it really hates it. We don't know until we get to the 31st how the market did during the month, but I have a feeling this year might be pretty stable and lead us into a very solid end of the year performance on top of a very strong year we've already had. And some of the reason for that is simply what we've been talking about all along. And you're aware of our power theme that we've been working through. And this month we're going to wrap up that power theme with our R, the topic of reshoring, and talking a little bit about how that plays in to what's been happening and also what I feel is coming over the next year and a half, even in doing that. And then we're going to wrap up with just some other planning tips for end of year before we're done. But Chuck, why don't you take us through kind of that last powerful R? I'm playing on our theme there, but this one has a big impact for everyone in how we're managing our portfolios.
It certainly does, Michael. Think about the importance of this. Last year, our acronym in the year 2024 was the word for, as in the number FOUR. R, of course, was reshoring. As you just articulated, power, the R, reshoring. We are not going to release our 2026 theme until probably the latter part of this year. However, the R is going to be represented again. So it shows, as you just said, the prowess of reshoring. So, what basically is reshoring? It's kind of a new term, Michael. Think about it this way, it's the opposite of outsourcing. So, if we go all the way back to 1989, the fall of the Berlin Wall, actually following that, we had the implosion of the Soviet Union Empire. We had the signing of NAFTA between the US, Mexico, and Canada. China ushered into the World Trade Organization in 2001. And basically, the world's supply chain changed significantly. People around the globe, whether it was the United States, Western Europe, or other first world countries, began to send factories and jobs overseas. Southeast Asia, Latin and South America, Eastern Europe, all garnered the low cost of production and certainly low cost of labor. In essence, what we saw, Michael, is the unwinding of this with COVID. CEOs said, oh my, I have our factories, our jobs, our intellectual property, and even our medicine half a globe away and now maybe in unfriendly hands. So, as that first slide says, it is a mega trend driven by durable structure forces. A mega trend is something that almost is undeniable. And we're also going to make the case a little later on here in the podcast, Michael, that is supported by both the Republican and Democratic parties. How do you like that? So think of this as deglobalization regionalization, maybe localization, or maybe just isolation, but things are changing significantly. And as I take a look at the next slide, Michael, the magnitude of this is incredible. This slide would be titled Cumulative Jobs Announced, Reshoring plus something called FDI, that's Foreign Direct Investment. So that would be akin to a company like Hyundai or Honda. Of course, Hyundai is based in South Korea. Honda, Japanese vehicle manufacturing company based out of Tokyo. If they were to simply say, we're going to build a plant in the United States, we're going to hire US workers, and we're going to fully build a vehicle here in the US, that's foreign direct investments. You can see here, Michael, that we have almost garnered 50% of what was lost. Remember, 5 million jobs were outsourced. We're at a run rate of just a little over 2 million. That's good news. Certainly, these jobs that will be coming back and are here already are high paying jobs. They also require a significant skill set, maybe not a college degree, but certainly a technical degree. People that have the expertise as an electrician or a plumber or a pipe fitter, a welder, will all do well in this upcoming automation based economy. And if you look at the next piece of information here, Michael, this is the next slide. This is fascinating. Think about this. The United States is the biggest manufacturing infrastructure investment gap, what's called them the best in class countries. So we'll talk about the economic leaders, the US, China, the UK, Japan, and Germany. Think about this, Michael. 19 straight years, the US infrastructure has received a D, D as in David, grade. The only worst letter I remember, Michael, in school was an F, right? D is pretty bad. And you can see that the investment gap is significant between the other world leading economic countries. So not only do we have the reshoring efforts to have investment opportunity, but we simply have an infrastructure, and we all know this, that's dilapidated, it's behind the times, and it needs a massive overload. Now,
Yeah.
as we go to, yeah,
Chuck,
I'm sorry, go
before
right ahead,
before you
bud.
move on, I want to
Yeah,
jump in there while we're talking about that because I've had some conversation recently, and the thing I want to highlight is tech, everyone thinks about technology jobs, right, and
yes,
high jobs, but this piece of data is evidence that it also affects blue collar jobs. I'm going to say the
absolutely.
things that have built this country through the industrial revolution into where we are now. And all of that infrastructure, buildings, roads, pipelines, electricity line, I mean all of those things that sometimes aren't visible because they're buried, right? Or built
Exactly.
behind walls. All of those things need upgrades that are driving that. So this job growth is going to continue across many industries, many sectors, and I'm excited about what that means for just the U.S. economy moving forward.
Boy, I am too, Michael. And it brings us to kind of the final two pieces of our discussion here. So who's footing the bill for this, right? That's what you always have to ask yourself. I think you brought that topic up oh so well here. If we go to our next piece of information, so this would be the slide that's entitled Manufacturers Are Moving Production Back to U.S. Shores. That's the reshoring theme. But look at the map of the US here, Michael. I mean, all of these companies, everyone is familiar with. GM, General Motors, plans to spend $4 billion to expand an EV production in the state of Michigan. New York, right, which is just above our office here in Pennsylvania. Micron Technology intends to invest up to 100 billion, that's with a B, over the next 20 years to construct a new mega fab. So what a fab is a germ-free factory that actually produces semiconductor processing chip
Mm.
businesses. Many people are aware of the automakers outside of the US. Toyota, $1.3 billion vehicle manufacturing facility in the great state of North Carolina. Apple, $1 billion. They just announced this, a new glass facility, right, that's going to be placed in Austin, Texas. Boeing, of course, returning, you got to love this, to their headquarters in Washington State. That's where Boeing was founded. But here's the one I love, Michael. TSMC, Taiwan Semiconductor, is planning to spend 40 billion of its own dollars on top of, get this, Michael, the 6.6 billion dollars which was given to them through the CHIPS Act. What was that? That's our hard-earned taxpayer money. So in essence, you're having companies on their own do this with their own money. Now think about this, Michael, the old follow the money statement, right? Why would these companies be doing this if they didn't think it was in the best interest of their shareholders and their workforce? They simply wouldn't. So this is a time unlike any other where we have actually seen a growth in the manufacturing facility taken back, as you said, to that first great industrial revolution.
Yeah, and this is
Yeah,
just the tip of the iceberg. I mean, we pulled out some companies with
absolutely.
some significant ones, but there are dozens more that could go onto this map all over in other states as well. And so this isn't just a regionalized thing. I think this is a US thing. Um, and
Yes.
and the other thing I'm going to point out with that is think about the pieces of the puzzle here. So we're talking about jobs coming back, and part of that was due to tariff structure
Yeah.
and balancing what was out of kilter, right? And I know there's feedback, both pros and cons in that discussion. This isn't a political thing, but the impact of that we're starting to see forward where things don't always come up at the same time, right? And so tariffs
Yeah.
and now jobs coming back, and that's going to lead to higher wages, which will help along the way and
Yes.
more employment. So a lot of those pieces they're tiered. They don't all come up at once, and so this may offset something for a while, but recognize that over a period of time, and I'm going to say over the next 4 to 7 years, right? This whole thing is going to start to build and be balanced with a much more robust economy. That would be kind of my assessment of how these pieces come together.
Uh, So very well said, Michael. And I think it takes us to the last component here of our podcast on this topic, which would be, I think, emblematic of the slide that says, "Why now?" Bipartisan support for America's most significant industrial policy in decades. I love that word, bipartisan. We know this, Michael, in a polarized political world, right?
Mm.
Blue and red don't get along on much. But you know what? They've gotten along on this. These three acts, for the most part, which were actually passed in the Biden administration, were bipartisan. They got Republican support. What are they? The CHIPS and Science Act in blue, the Inflation Reduction Act, and the Infrastructure Investment and Jobs Act, the IIJA, the IRA, and the CHIPS Act. Michael, think of this. We just talked in billions, right, with companies. This is trillion. This is $1.85 trillion of taxpayer money that has been earmarked to aid in this entire reshoring of the United States. So it's a combination of fiscal policy, but actually corporate America and global companies saying we want to have our workforce, our facility, our intellectual property, our medicine back in the hands of the borders of the United States. And I think you're hard pressed to find anyone who would disagree with this in the vein of investment opportunity for our clients, great opportunities. I think, as you just said, over the next 5 to 10 years, this is a mega trend that is undeniable. And we hope to take advantage of it, Michael, for our clients.
Yeah, absolutely. And I know everything that goes up comes down at some point, right? Even
Yeah.
the most well-tuned athletes have to stop and take a break and a rest.
Yeah.
But I think we're in for an extended growth cycle, a bull cycle in this overall market. It's not going to come without pauses along the way, but I don't think those will be things to really panic about. But they give us opportunities to make adjustments, some tax planning, and other things that come with market fluctuations in doing that.
Well
So
said.
great stuff again, Chuck. I appreciate the time you put into putting that together.
No
And for
problem.
all of you who are listening this month, I hope you found this to be helpful in giving you some a look, a glimpse into what I think the future may bring and hold. Wow, what a great year it's been so far, and we're blessed and we're thankful for how things have played out. Just be cautious, though, in recognizing all runners take a rest in this market that's been running at some point. I can't tell you when, but due to extenuating circumstances, the normal cycles are not necessarily playing out like they would. We're in a period that normally would be soft, but with Fed inflection in the market, right, by lowering interest rates, it might just keep things at the surface level and cruising along, maybe at a slower pace, but a positive one rather than a step back. And so we're seeing that play out in current portfolios. Our outlook is strong. What a great time here at end of year to get those Roth conversions completed, to take advantage of maybe some tax changes. We're not going to have the opportunity like we do in many years to do some tax loss harvesting because portfolios have performed very well this year. Who knows? We still got 3 months to go, but certainly the normal save, build, watch your spending, and certainly this is the time of year to reevaluate your giving and where your generosity sits in organizations that you may want to bless with some of that growth that we've achieved throughout this year. We're way above targets for what we anticipated. We love it. We'll take it. But now let's put it to good use and have some positive kingdom impact as we move forward. Once again, thank you for being here. If you like what we have to say, hit that subscribe button on our channel. Invite your friends. Share this with them. I'm hearing ripples of people that are kind of worried, panicking about what's ahead. But this may be positive news that they want to hear, and that would be beneficial. And as always, if you have people that you know and you care about and you would like to connect them with us, feel free to have them contact us here at the office, and we'd be happy to chat with them. I hope you enjoy your fall. Enjoy the month of October with some family friends, and do me a favor, sit around a campfire and have some s'mores and some coffee or hot chocolate with me. You guys have a great time. See ya.